Hi everyone, I'm Gabriella. So my last video I talked about the business of liquid nitrogen, and so this video is kind of a part 2 to that, and we're going to talk about the average costs and cost of goods sold. Okay, so let's talk about the cost of goods sold, or the COGS. The cost of goods sold is a direct cost traceable to the production of goods sold by a company. This amount includes the cost of materials used and direct labor costs, although it excludes indirect expenses such as distribution and sales force costs. The equation to finding cost of goods sold is relatively simple. The equation is your beginning inventory plus your inventory purchases minus your end inventory, which is equal to your cost of goods sold. Your beginning inventory is the amount of inventory purchase that could have been sold or the cost of goods available for sale. For example, Elizabeth has a business of selling shoes on eBay. Her beginning inventory count shows that she has $800 worth of inventory on hand. Over a month, she purchases another $2,400 worth of shoes. Her end inventory count at the end of the month shows that she has $600 worth of inventory on hand. So the equation would be the beginning inventory, 800, plus the purchases, 2,400, minus the end inventory, 600, which is equal to a grand total of 2,600 for the cost of goods sold. Now let's talk about average costs, or average total costs. Average total cost is the per unit cost that includes all fixed costs, which are required for production but do not change based on output, and all variable costs, which increase or decrease as output increases or decreases. The beginning inventory balance and the purchases over a period of time determine the average cost per unit. That average cost per unit then is used to determine both the COGS and the ending inventory balance. The equation would be the beginning inventory plus the purchases in dollars divided by the beginning inventory plus the purchases in units, and that would equal the average cost per unit. To find the cost of goods sold by using the average cost, you want to multiply the average cost per unit by units sold, and this will give you the cost of goods sold. To find your ending inventory balance by using average cost, you want to multiply the average cost per unit by the units in the ending inventory, which will give you your ending inventory balance. For example, Maggie's inventory consists of 50 shirts, all of which have been purchased at $3 per shirt. Over the month, she purchases 100 shirts, 60 at $3 per shirt and 40 at $3.50. Her beginning inventory would be 50 shirts, $3 per shirt. Her purchases would be 100 shirts, 60 at $3 and 40 at $3.50. She has 150 shirts for sale, which comes out to $470, 110 shirts at $3 and 40 at $3.50. Her average cost per unit would be $470 divided by 150, which would give her an average cost per unit of $3.13. Her ending inventory would be the 50 shirts times $3.13, which gives her an ending inventory of $157.